ChatGPT is absolutely insane. The amount of things you can do with it, lots of hype around it, and lots of people interested in it, and for good reason. It's very exciting, everything going on with AI. And the future of this technology, who knows what it's going to look like. But I made a video a couple weeks ago actually using ChatGPT in order to pick stocks and make a stock portfolio because I wanted to see if AI could make a portfolio together and try and track it throughout like this next year and see how it performs. And if we actually check up on that portfolio, you can see here it is actually up over a percent, 1.3% up. It's a $10,000 starting base. This is paper trading, so it's a fake account just to track it. But it's actually up 1.3%. You can see the stocks that they picked was Amazon, Apple, Microsoft, JP Morgan, Johnson Johnson, Walmart, Bank of America, Exxon, AT&T, and Goldman Sachs. And it's kind of surprising to see basically the big losers of this are the tech companies. Apple and Microsoft, they're red, or like red right now. And then Johnson Johnson and Walmart are red, but everything else that the AI picked, they're actually up in the green, which is pushing this whole thing to actually being a green portfolio right now. But the overall market is recovering. Things are getting a little bit better for 2023. So maybe that has something to do with it. It's just still interesting to see different sectors that the AI picked or was involved in and wherever they pulled data from. Now it's not clear. It's not new data. It's very old data. It's from 2021. That's all the AI is trained up to. So you can't blame the AI if it's a bad portfolio, if it names something dumb. But right now, it's pretty interesting to follow this whole thing. But what if we put man against machine, against the AI, and tried to build our own portfolio in a way that I would build one to kind of compete with this and see who wins? I think that would be interesting to see if an AI can build a portfolio better than a person, or if AIs are truly just going to take over. There were a few problems with the AI. You couldn't really prompt it to get you a response to say, build this portfolio. It's not designed to do that. You can't even get it to really say, what percents or like weigh things differently and put like 20% somewhere, 30% somewhere else, 10% in a different stock. It was all even, and that's how it went down. So what if we built a portfolio that wasn't even in things that I think could perform well over the next year and try and beat the AI? It's not going to be something crazy. It's not like this ridiculous stock picking thing. Stock picking, after all, is a losing game. This is just something fun to try and see if ChatGPT is actually up to the task to replacing maybe financial advisors or something, going down that route. Maybe we go into the AI investing world and there's no one interacting with the stock market. It's all AIs. But for building this portfolio, to start, I would want to make a pretty strong foundation of an index fund, because you can't really lose investing in index funds over a long period of time. That's a much more proven way to go about investing than picking individual stocks. So for the main portion of this entire portfolio, I'm going to make it 40% VTI, which is Vanguard's total stock market index. I think that's something like 3,000 stocks in it. So you are involved in the entirety of basically the US stock market. Pretty similar to going with something like VOO or the S&P 500, but it's just a little bit broader than the S&P 500. It's a lot more companies. So we'll venture into VTI as the backbone of this portfolio and put a little bit more of a focus into Apple stock, with making Apple 20% of the portfolio. Apple is the #1 most valuable company in the world for a reason. They basically print money. The iPhone is needed everywhere. Everyone loves the iPhone, and they just recently got 50% of all US market uses iPhones. So they're still kind of growing, which is crazy with them being a over $2 trillion company. And obviously that's going to add some volatility to the portfolio. Apple is a tech stock. It's probably the least volatile tech stock out there, but it's still a little bit more volatile than the rest of other stocks in the market that you'd probably see, like oil, banks or something, or like dividend paying stocks are pretty not volatile. But to shape that up, I think we get one little less non-volatile stock to wrap this up in the stock market. And to take down a little bit of that volatility, I think that we add a kind of a dividend paying stock, even though dividends aren't really going to be calculated in this, but it's going to add some sort of support, more foundation building off VTI, just make everything a little less volatile. I was thinking about a lot of different stocks for this, something like JP Morgan or Coca-Cola, because those are pretty stable dividend paying companies. They're not going to be too volatile. But I think that we go for something like McDonald's. It's pretty stable, not too volatile, still has the dividend, but also still has some pretty good growth for the past 5 years. Now, going into a recession and pretty tough times, maybe people cut back on buying McDonald's and buying fast food in general. And that's something that could actually take the stock down, make it fall a little bit through 2023. But hopefully it provides at least a little bit of stability and doesn't actually, collapse or fall pretty hard in 2023. That's actually going to do it for the stock market part. So we have VTI at 40%, Apple at 20%, and McDonald's at 20% as well. We're going to bring the total to 80%. So we have one more pick for 20% of the portfolio to put in here. And this is going to add a lot more volatility to the portfolio, but I think it's going to be in a good way in 2023. And that's going to be Bitcoin. So obviously there's always the extremes. People either hate Bitcoin or love it. There's not really anyone down the middle on Bitcoin. But right now, I think 2023, we've seen pretty tough times for Bitcoin already. The bear market, historically, this would be times where it starts to kind of recover. And even if that doesn't happen, I don't think it really matters. I think Bitcoin will still go up at least a little bit in 2023. Nothing like 100, 200% or something crazy like Bitcoin has done in the past. But I think it's going to provide good volatility for this entire portfolio. So to end it off, we've got 40% VTI as a foundation and backbone of this portfolio, 20% Apple to get a little bit deeper into the tech stocks, add a little bit stock volatility, and then 20% McDonald's stock for a little bit more stability with potential growth there, and then 20% Bitcoin to add pretty big volatility, but pretty big upside too. So I think this will actually perform pretty well against the AI stock pick. The AI's ones are a lot more not too volatile or really kind of safe stock picks, big companies. So I think there's bigger chance that the AI either stays consistent, less volatile, and like smaller returns, or this portfolio is either going to be boom or bust. Either it's going to have really good returns or it might have really bad returns. I don't think this is going to be a middle of the line kind of portfolio, simply because it's focused a lot harder on tech, and maybe tech has more to go down. People talk about that all the time. And Bitcoin being in there is obviously going to add lots of volatility to it. So which portfolio will perform better in 2023, the AI one or mine? That's what we're going to pay attention to, and we'll revisit this at the end of 2023 and see if AIs are actually ready to take over the world of finance. That's going to do it for this video. As always, I'm going to smash the like button and subscribe, and I'll see you guys in my next video.